Welcome back, everyone. There is some big news today from the Federal Reserve.
That's right. In a significant move, the Fed has announced a half-point cut to interest rates. Here to help us break down what this means for you is financial expert Mark Madrid. He's the CEO of Breakthrough Maven LLC. Mark, thanks for being here. Let's just jump right in. This is the first rate cut in 4 years, and it's a big one. So how will this affect the average consumer, especially when it comes to mortgages, credit cards, and loans?
Well, Andy and Candace, great to be with you as America's Energizer and National Small Business Champion. Today is indeed a good day of great news. As you mentioned, the Federal Reserve has cut interest rates by 0.5%, and that's the first reduction in 4 years. This decision, what does it mean for you? Could have a significant impact on your finances, from mortgages to credit cards. This could mean better access to homes and vehicles, more manageable credit card payments for small business owners. It could mean more capital within reach that you've been looking for, and just maybe that reset button. So let's keep it real. Lower interest rates mean less expensive borrowing costs. If you have a mortgage, credit card debt, or personal loans, you might be seeing lower monthly payments and more cash in pocket, or be eligible for lower interest rates, which can be suffocating for the everyday person. This can free up some cash for other expenses or savings, or it can be what I call, Andy and Candace, that financial reset moment.
Always nice to have a reset. And we've been waiting a long time. You've said 4 years. That is a very long time. A lot of people have been putting buying a house on hold. If you're looking to buy a home or make a large purchase, or you're thinking about refinancing, because some people did buy a home when interest rates were high, is now the time to do it, or should we wait? Could they go lower?
Well, with lower rates, now could be a great time to buy a home or refinance, as you stated, your mortgage. You'll likely get a better deal on your loan, which can save you money in the long run. However, it's always wise to consider your personal financial situation and consult with a financial advisor. I submit for all you watching in your consideration not to act on impulse, I know from experience, and receive the opportunity to do more shopping, more comparing, and potentially have the opportunity for more choice and leverage. So that's what I'm excited about. The everyday person can have that opportunity.
More choice and more leverage is a good thing, of course, but let's talk bigger picture now. Could this rate cut signal concerns about the broader economy, and what should consumers be mindful of as they plan their finances?
It's a great question. A rate cut can indicate that the Fed is trying to stimulate the economy, which might be slowing down. Consumers should be mindful of their spending and saving habits. I'm talking about you all out there watching, and ensuring that you have an emergency fund and are not over leveraging yourselves with debt. In other words, this is not an open call for luxury purchases, in my view, but more of an opportunity to take some relief with potentially more cash in your pocket and applying learnings from this period in terms of strengthening your financial position and decreasing stress for you and your family or loved ones. I say that money can't buy happiness, but certainly managing money can make it more manageable for your lives.
A really great perspective. Now, what effect will this rate cut have on savings accounts and other investments that people might have?
Well, while borrowing costs go down, so do the returns on saving accounts and some investments. You might see lower interest rates on your savings, which means less growth over time. So it's important to diversify your investments and perhaps look into options that offer better returns. So this is exactly where a trusted financial advisor and a consistent financial advisor comes into play to adjust your portfolio based on your preferences, your life cycle, and your appetite for risk. Again, this is a great day in terms of you possibly having more leverage, possibly having more choices, and possibly having more access. So thank you for being a front row students and being with us here today.
Yeah, strengthening your financial position and, of course, reducing stress. Looks like we are headed in the right direction, finally. Mark Madrid, thank you so much.
Thank you very much. Great to be with you.